Thank you for everybody for being here, and Peter and the Switzer team for having ARC Asset Management here. My name is Adrian Lee Conway. I'm the Director and CEO. So ARC Asset Management has around 30 years of property and experience finance. We're the responsible entity for the Murray Direct Mortgage Fund that has been in operation since 1974, and we're a contributory mortgage fund. We have an AFSL retail licence, we're ASIC regulated, we have an external annual audit completed by RSM Australia, our fund lawyers are Mills Oakley, and we're a member of AFCA. So what is a contributory mortgage fund? I spend a lot of time trying to explain it, so I'll do my best. It's your money and your choice. It's a fixed income producing investment. You have direct interest in the investment of your choice. It's secured by real property over a first mortgage only. Flexibility and choice over the security type, location and term. Differences in our space. A contributory fund is a select investment opportunity for your choice, direct interest in your chosen investment. Whereas a pooled fund, investor funds are pooled together and invested into opportunities chosen by the funder. You become a member of ARC Asset Management by signing our product disclosure statement. This is obligation free and it allows you to access the opportunities approved by our credit committee. Choose an investment that is right for you. Investment funds are then allocated to the sub-scheme / mortgage at settlement with returns paid monthly. Who invests with ARC? On our books at the moment, it's a myriad of different organisations and people. Most investment vehicles by our members use their self-managed superannuation funds, and most of them are individuals seeking regular income. It's select first mortgage only. We only lend in Melbourne, Sydney and Adelaide. They're the only markets that we're comfortable in and that we understand. You have a fixed return, a fixed term and location. We're a boutique investment fund. You have direct access to the decision makers, and once again, interest is paid monthly. Interest rates are dependent on risk on a particular transaction that we've approved, but generally they're between 7 net and 10 net back to the investor. For example, 7% might be an existing asset with a low LVR. 10s would be definitely in the construction space. So our loan to value ratios don't go higher than 75%. Whilst our lending policy will allow us to go higher, we haven't as yet. And our minimum LVR on our books at the moment is 30%. In the event of a default, up to 5% of the standard rate is paid to the investor and accrued out of proceeds from the sale. Product options that we lend on are vacant land, construction, term debt and land subdivisions. Select investments of your choice, diversify your investments over a number of opportunities, access to all due diligence of each opportunity including financials and ARC's instructed valuations. Residential, commercial and land subdivisions are what we focus on. You have flexible terms. The investment terms range from 6, 9, 12 and 18 months. And once again, interest rates are between 7 net and 10 net paid monthly. All securities are independently valued by ARC's instructed valuers for first mortgage lending purposes only. The way we work our credit and assessment, it's a screen, value, review, approve and settlement. Screen is to qualify a potential borrower and if we can meet their needs. The borrower will need to meet our lending policy and requirements, and the most important thing is it aligns with our investors, being ARC. The properties will be valued independently, externally by our external service suppliers and registered valuers. They're under ARC's instructions for first mortgage purposes only. They're completed at the time of the application to reflect market conditions and must be within our LVR limits. The credit committee assessment will be to review the valuation, credit and bankruptcy checks, compliance checks, review of the financials, clear exit strategy and serviceability. On construction, we require a certain level of debt cover from enforceable 10% deposit pre-sales. Those contracts are reviewed by ARC's lawyers to confirm sunset dates, they're enforceable and on foot through the term of the project. The credit committee would then approve the loan. A supplementary PDS will be lodged, which outlines the specific investment, and it will be distributed to our investors to read through to allow you to make an informed decision if this investment is right for you. Solicitors are instructed. Solicitors complete settlement. ARC's investors are notified. Loan managed by ARC's credit team over the term of the facility. Loan management is due diligence, making sure everything is compliant, audited and enforceable, builders PI cover, updated financials from year's end for the borrowers, along with sales, etc. On construction, we always have a quantity surveyor that will do an initial report for us, which is what's called on a cost to complete basis. That is instructed by us, and the QS will report to us monthly. They provide a drawdown claim that will allow us to review, and if we're satisfied the works have been spent on the site to date, then we will pay that claim. Along with the quantity surveyor, if the project is more complex, we'll hire an independent project manager that will report, the QS will report directly to them, and the project manager will report directly to us. Also, as a credit team, we do a monthly review, and we sit down and have a PCG meeting, which is called a project control group meeting, with the borrower/developer, and they're either civil contractor and builder. We'll review the project, we'll review the monthly report that we've been handed, and we'll also work out if there's any critical items moving on the project and how we're going to mitigate them if there are, and make sure that the QS is in line with the developer's cash flow. Investor updates, your monthly statements are sent anywhere between the 15th and 24th of every month. That'll show your monthly payment and the date that it has been paid. We do a bi-monthly update on each construction project to the investors, and we also do an on-site viewing of the project without the builder and developer. ARC's growth, we will stamp our licence with ASIC only in 2016. My partners and myself felt there was a bit of a very good market out there at the moment, with the credit being very tight for good borrowers and being able to get good returns for our investors. We started with 5 million under management. We currently to date have 47 million under management, and during the period from February 2016 to date, we've settled $71 million of loans. It's forecast that by June 30 we'll be at 60, and in all likelihood we'll have 80 million under management by year's end, with the opportunities that we've got over the next quarter. That's a little bit of a growth about just a chart on how we have grown over the last few years. And we're just making a note of a defaulted loan, and that the percentage is 2.65 over the total loans that we have approved and settled. Once again, 71 million of the 71 million was a $1.9 million loan that went into default. The loss to the investors was zero, and they earned a 14% default rate for a period of 62 days. It became, I'll get onto that next. So previous opportunities that we've sold, settled, and we've been out on behalf of our investors was 4 very high-end townhouses in Mordialloc in Victoria. Couple of minutes walk to the station, 7-minute walk to the beach. They were all pre-sold with 10% deposits, all unconditional contracts. After our PCG meeting in the 8th month, it became very clear that the builder wasn't going to get statement of compliance and certificate of occupancy issued and settled within the next 4 months. We issued the borrower, developer, a letter stating that they will be in default at the maturity date at 14%. The 14% was then accrued for the period of 68 days. That was then came out of sales proceeds and distributed to the investors. That was an LVR of 67% of gross realisation net of GST. Not to make things too complicated, but at 60% of the value if the building was completed at a rate of 8% paid monthly. We just finished 16 apartments, the construction of 16 apartments in Highmarsh in South Australia. That had a rate net of 9%, once again an LVR of 67% over a 17-month period, and that went fine. Noble Park in Victoria was 4 townhouses, 2 of them were sold unconditionally. Unfortunately for the borrower and the builder, they started without their funding in place. That sometimes isn't uncommon. We got our consultants out there to make sure everything in relation to the stamp plans was all in accordance. We then advanced the developer on a cost to complete 1.4 million, and he was out within 6 months, but the investors got the benefit of 9 months as it was minimum term, excuse me. That's just to give you a little bit of a feel about the projects that ARC do. We don't do large construction. In our little space is that 15 down to $5 million lend on a specific asset with a good LVR, with borrowers who have experience and capacity, with good consultants behind them. Current opportunities that we're in at the moment is 88 blocks of land in Greenvale near the Tullamarine Airport. The civil contractor is the strongest civil contractor in Victoria. They've all been pre-sold. It's got a net end value of $26.5 million. And we've lent a 56% LVR off memory. I think it was about $14.5 million as a loan with a rate of 8.75% paid monthly. The maturity on that is the 11th of this month and is going along quite well. The other one that we're in at the moment is 4 super lots in Riverstone out in the western suburbs for a very experienced developer. It's distributing a rate of 10%. Monthly with an LVR of 60%, and that's another 12-month term. All the certificate of compliance was issued with a linear plan in a council on the 1st of April. We expect the titles to be issued within the next 8 weeks. So that's just to give you a feel of the deals that we're currently actively managing at the moment. So thank you very much for all listening to what ARC does, and thanks once again, Peter and the Switzer Group for having us.
Pleasure, mate. Okay.